Stanley Druckenmiller is riding the stock market's raging mania, but he intends to sell many of his positions before the end of the year. Although he remains long in the stock market, Druckenmiller believes a bubble has formed in a variety of assets.
I can't find any period in history where monetary and fiscal policy were this out of step with the economic circumstances, not one.
He stated that he has no doubt that the U.S. economy is dealing with greed and excessive froth in all assets. Druckenmiller feels that lax monetary policy is lulling investors into a false sense of security that will abruptly end and leave the average retail trader in pain. In this video, I will tell you why you should listen to Stan Druckenmiller and let you know which companies he's selling. With a personal net worth of over $5.5 billion and a portfolio worth over $3 billion, Stanley Druckenmiller, the CEO of a New York-based hedge fund, Duquesne Capital, is one of the most well-known figures on Wall Street. The majority of his investments are in the technology and services sectors, with basic materials, finance, and healthcare rounding out his portfolio. When Druckenmiller announced that Duquesne Capital would close to new investors in 2010, he had never experienced a losing year in 3 decades. Despite the fact that he is no longer taking new investors, the billionaire continues to make public regulatory filings. According to these filings, Amazon, Microsoft, and PayPal were among the top investments in the Duquesne Capital portfolio at the end of the first quarter of 2021. These companies account for about 20% of Duquesne Capital's total investment portfolio, with Microsoft Corporation holding the top spot. Druckenmiller rose to prominence by assisting George Soros, the founder of Soros Fund Management, in shorting the British pound in 1992, netting the hedge fund more than $1 billion. Druckenmiller established expertise in currencies and interest rates while working closely with Soros for the majority of his finance career. This has aided him in his Duquesne Capital success. During the financial crisis of 2009, his fund was one of the few to achieve positive returns, but it fell short of the previous year's record returns. Druckenmiller, along with Soros, has honed the art of macro trading over the years. This entails combining 2 investment techniques into one. The first is betting on global currencies while keeping political trends in mind, and the second is traditional stock trading based on basic business fundamentals study. Druckenmiller's accomplishment stands out in an industry that is grappling with fintech and a major shift in market dynamics fueled by retail traders who actively sabotage hedge fund bets. So, here's a rundown of the 5 stocks that Stanley Druckenmiller is selling. These were based on Duquesne Capital's investment portfolio at the end of the first quarter of 2021. During the first 3 months of the year, Druckenmiller's fund sold off all of its holdings in these companies. First is the Walt Disney Company. Disney stock has provided investors with returns of more than 52% over the last year. The company is a mass media and entertainment company. Over the last few months, Druckenmiller has sold his entire Duquesne position in the company. The information reported on July 2nd that the Walt Disney Company's digital streaming network, Disney Plus, had seen a dramatic drop in subscriber growth in the United States during the first half of 2021. In the first quarter of 2021, 134 hedge funds in Insider Monkey's database held positions in the Walt Disney Company worth $12.5 billion, down from 144 in the previous quarter worth $16.4 billion. By the way, if you're enjoying the content, please be sure to like and subscribe. I post videos every Wednesday. As a reward for subscribing, here is a 5-second video of a cute puppy. Next on the list is General Electric. GE is a high-tech manufacturing company situated in Boston. In the last year, the stock has returned 96% to investors. According to the most recent disclosures, Duquesne Capital does not own any shares in the company. Carnival Cruise Lines is next on the list of companies that Stan Druckenmiller is selling. This Florida-based leisure travel firm has seen 58% rise in its stock price over the past year. During the first quarter of 2021, Druckenmiller cut his entire position in the company despite the fact that Carnival is going to return to offering cruises in the summer of 2021. This would indicate that Druckenmiller believed the anticipation of Carnival reopening would be seen as more favorable to the company's stock price than the actual event itself. This has proven to be true as Carnival Cruise Line stock is down roughly 33% since early June. Fourth on the list is Crowdstrike. Crowdstrike is a member of the high-flying cybersecurity companies that have seen dramatic rise in stock price after the pandemic-induced work-from-home movements and a series of cyber attacks on U.S. companies. Crowdstrike has seen an astounding 728% run since the 2020 March low. However, regulatory documents reveal that Duquesne Capital has sold all of its shares in the cybersecurity company. Last but not least is Analog Devices. Analog Devices is an integrated circuit, software, and subsystems manufacturer and seller. Over the previous 12 months, the stock has provided investors with returns of more than 41%. Duquesne no longer holds any of the company's stock.